Good morning, sir.
Morning.
Thank you so much for your time to NDTV
My
Profit.
pleasure entirely. Welcome.
Great to speak with you. I think a little after a year that you have taken charge of Reserve Bank of India. We are, by the way, on one of the topmost floor, and we have a beautiful view here of the entire Mumbai city. We're speaking to Governor at a time when 2026 is also starting off with a bang.
Yeah, and thank you for coming over, and it's my pleasure to interact with you.
Please, sir. So, Governor Malhotra, you've, of course, finished a little over a year at the Reserve Bank of India. Going back to December 11th, 2024, one would have not perhaps thought that there would be so many things happening, starting off with a tariff war, geopolitical conflict, regional conflict, and the way you have responded. I think many who watch financial markets, especially equity markets, felt that the Reserve Bank rose to the occasion. How do you look at this period?
You're absolutely right. These have been rather uncertain and challenging times, not only for India, but for the whole world. And surprisingly, the global economy has held up. It's been rather resilient. A lot of it is to do with perhaps, better domestic economic frameworks that have been put in place over the years. Yes, the trade tariffs have not been, as high as they were expected. There has been no retaliation by countries. Indian economy, of course, is the star, growing at the highest rates amongst major economies. And a lot of it, of course, is to do with the fact that we are primarily a domestic demand-driven economy. And this has spurred, this uncertainty has spurred reforms, deregulation, the world over, including India. So GST reforms, for example, have helped us. This has prompted countries across the world for regional and bilateral cooperation. So that has also helped. While there is challenge, I think every country has seen in it an opportunity to improve and take this as an opportunity rather than as something which more as an opportunity, let me put it like that.
Sir, as an opportunity and also as a challenge, from your perspective, and you've described how the government of India at the center has come out with these reforms, etc. If we look back at your actions, 125 basis points in rate cuts coming in, the message to the market that the Reserve Bank of India is going to be growth oriented, deregulation of many old archaic laws, making it easier to do business for banks, giving out licenses which were stuck since decades. What has been the overall thought, if you had to distill your vision and your outlook to running India's Reserve Bank?
No, two things come to mind. One is the fact that in these very uncertain times, we have been primarily led and driven by the domestic growth inflation dynamics, because as I mentioned, primarily ours is a domestic demand driven economy. We are better positioned vis-a-vis some of the other smaller Asian countries which depend more on exports. Secondly, I think because inflation has been rather benign, so that's why we were able to cut rates by 125 basis points. The second thing to be kept in mind is that the banking industry over the last few years, and this is not the result of work of 1 year or a few months, it's the result of a long work of everyone, of all the players, whether it's the private sector banks, the public sector banks, the regulator, of course, and government, being a very, very important stakeholder, being the owner of the public sector banks. The strength that you see today in the banking sector is a result of that. And that has enabled us to take some of the measures that you mentioned relating to changes that we brought about, deregulation as you would like to call it, in the banks, and giving the banks some more space to work on. So these are, I think, the two changes or two things, that we kept in mind while taking our policy-related decisions.
I would think, and if I may also add one more thing, is opening up that sector in the sense. Some of the hugest foreign inflows or FDIs or foreign entities also coming in and being a part of the larger financial sector has happened in the last 1 year. What is your outlook on that, sir, in terms of welcoming that kind of investment and strengthening Indian banking system? Do you think that's just opened the pathway for more to come?
Yeah, so as I mentioned, this is not the result of, number one, the work that has been done in 1 year. It's the cumulative impact of the work that has been done over several years as a result.
So you are not taking credit for it.
As a result of which the banking industry, the NBFC industry is today so strong. So there is interest amongst investors, both foreign and domestic, in this industry, primarily because of the strength of this industry. There is interest in the banking sector because they see long-term prospects for the Indian economy. Because this capital which comes in the banking industry especially, this is not hot money. This is long-term patient capital which believes in the long-term growth, the long-term potential of the Indian economy. And so we have not made any regulatory changes over the last 1 year to enable that. The regulatory regime, the eligibility criteria for investments, whether domestic or foreign, has remained the same. There is absolutely no change. It is primarily, therefore, as I mentioned, the strength of the Indian banking system and the belief in the Indian long-term growth story, which has gotten investments. And it may be interesting to note, and I think the media has covered that quite well, but I think last year, 2025, in that sense, maybe in some ways, a watershed year. I think almost about 15 billion US dollars of committed investments or actual inflows have come in various private entities in 2025. So that speaks volumes of the strength of the banking industry, and we are very hopeful that going forward, with all the changes that have happened over the years, as I mentioned, the governance, the good governance that the banks themselves have put in place, the better and improved supervision that we have put in place, all these things going forward as well will keep the sector quite healthy and resilient.
Do you expect, sir, more such inflows or such interest to come in? And the interest was always there. The question was about opening the door. And now the sense is that India in this sector is truly open for business.
Going forward, see, as I mentioned, the sector remains very robust, very strong, number one. The Indian growth story is very much intact. We grew at 8% for the first half. We are projected to grow at 7.4% for this year. Next year, the RBI estimates for growth are almost in the region of 7%. We are the fastest growing economy, as you are aware, for a number of years amongst major economies. The demand for capital, therefore, for the Indian economy, Indian as well as foreign, is going to remain because we are growing and we are growing at a good, healthy pace. So yes, there should be more such investments. However, as you are aware, it's not a linear path. If we get X in 25, it doesn't mean, that we will get, X plus 10% or 20%. It's not going to be linear, but overall, I think, yes, we should be able to attract good investments in the banking. As well as, in the general economy as well. We have now, the EFTA agreement. We had the EFTA agreement earlier. Recently, we had the New Zealand agreement. Yes. Over there also, there have been investments which have been committed. New Zealand has committed about $20 billion US. EFTA, there was $100 billion US investment commitment. The tech majors have made announcements. Amazon, $37 billion, Google, Microsoft, all of them, have made announcements for investments in our country. So whether it is the banking sector or whether, it's technology or overall investments, I think capital flows, foreign as well as domestic investments should continue at a faster pace going forward.
Sir, you have been, and by you I mean the Reserve Bank has been proactive in giving a growth-oriented environment for private sector to flourish in, with the rate cuts, whether it's the liquidity measures which have been taken through open market operations, all of that has been done. But some would then ask, why has private capex or the rate of private borrowing not kept up? Do you have any thoughts on this?
See, credit is growing at a good pace now. It's growing at almost 12% per annum. Also, let's keep in mind that this is bank credit. If you include other sources of credit, the growth in credit is about 13%. And so if nominally we are growing at 8%, as is the forecast for this year, a 12 to 13% credit growth is very good. Investment also, as per the estimates, investments are also to grow at 7.8% per annum. So investment is actually happening. What's happened, however, is that the investment is happening, in sectors, in newer sectors, number one. Number two, investment intensity now is lower because investments have become, more productive. And also, in some of the sectors we were in deficit, like for example, in power sector, we were in deficit. Now, we are in a surplus. And as I mentioned, investments have moved into areas like renewable energy, into defense. And we are also seeing, investments in steel, etc. So overall, I think there is good investment generally overall in the economy.
In your opening comments, Governor, you spoke about how the turbulence turned up in tariffs, etc. One of the byproducts, perhaps, of this geopolitical turbulence is what has happened to the rupee. Now, in the last couple of months, I think the street has been divided in speculating whether the Reserve Bank is defending the rupee enough or not defending the rupee enough. Just want to understand your perspective on this. Just a very simple question. Should Indians be worried about the rupee at 90? And what do you think the Reserve Bank should do about it, if anything at all?
See, our policy on rupee and exchange rate has been rather consistent over the years. We believe that the markets are quite robust, they are quite deep, they are quite wide, and so we believe that the markets will ultimately, determine the prices. Our aim in the Reserve Bank of India is primarily to ensure that there is financial stability, that there is an orderly movement of the exchange rates, and it is our aim, therefore, only to curb any undue or any excessive volatility. So that has been, our policy for a number of years. and we continue with that policy. We do not pursue or target any price level, any band. Let me say, that the macroeconomic fundamentals of the Indian economy are very strong. Growth is low, growth is high, inflation is low. We have sufficient foreign exchange reserves, $690 billion or so, and your current account deficit is also, very, very manageable. So on the whole, on the externals front, we are very comfortable. There will be fluctuations. There will be fluctuations in the movement of price. It will not be a linear movement. There will be ups and downs. If you look at over a longer period, we have depreciated, by about 3%. Inflation in India vis-a-vis, the advanced countries is generally higher. So this is one of the primary movers, as to why we depreciate. On an average, we depreciated by 3%. This year, we have depreciated calendar year about 5%. But prior to that, we depreciated only about 2.5%. So the average is more or less, again, 3.5% or so. It's not going to be a linear movement, but it's more or less, as the market forces as where it should be.
So, if I may ask, very in a straightforward manner, has the RBI had to come in and intervene in the last couple of months on the rupee? Because there was a point in a couple of days when the direction was very dramatically downwards, and then there was some stability coming in.
No, as I mentioned, see, we only try to curb the excessive volatility.
Okay.
And we do not target, any price level, whether it is 90 or 91, or we don't target any price level. The aim is only to avoid any kind of an excessive or abnormal movements. And this movement is both ways. There could be a depreciation or an appreciation. Anything dramatic is what we like to curb.
Sir, you talked about the economy, and you have described the Indian economy as in a Goldilocks phase. And for some of our viewers, you have to go back to the old tale where the porridge is neither too hot nor too cold. My question is that with inflation this low, is this really the best case scenario? Yes, growth is 8%, 7.5%, as you said, for GDP, inflation at 2%. Is this really where we want to be? Is this also because of some external factors? How do you look at the inflation part of that equation?
Yeah, inflation has been low, as you mentioned. But again, this is low because of number one, food prices.
Yes.
The food prices have been rather low. And that is again, because of the base effect. Because we had very high food inflation earlier. And so from a higher base, inflation now seems to be lower. The other thing is, at the same time, the commodity global prices are also quite low. So it's more, let me say, it's more, a supply side phenomena rather than, a demand side phenomena. Number two, it's going up as the base effect, wanes. Now the latest imprint that we have from 0.7 now to 1.3. Our projection for this quarter, by the way, is 2.9%.
Yeah.
And going forward, it's 3.9 and 4%. So that's what the target is. So this is temporary because of base effects, number one. And number two, let's also keep in mind that this is primarily, as I mentioned, because of food prices. Core inflation is 4.6%. Of course, a lot of it is to do with precious metals inflation.
Yes.
If you exclude that, it's only 2.3% again, which is also, quite low. As I mentioned, primarily again, because of global various reasons, of course, and global commodity prices also, being low is one of the reasons why we have this. So, on the whole, I think this is inflation is at a level that we are comfortable with, because going forward, it's inching up. It's primarily because of supply side reasons, and it's because of a lot of it is because of base effects.
Does this cap the possibility of having some more rate cuts this year? Do you think, I mean, and I know this is the MPC which will make this decision, sir, so I'm preempting that part of the answer, but your view, as inflation normalizes, I won't even say inching up, as it normalizes, growth may have some pain points with what's happening externally. Today we're talking about another 25% if any country does business with Iran. We don't know what's going to happen on a day-to-day basis. Where do you see the role of rate cuts coming in? Do you see room for more?
See, we are in a neutral stage, as you are aware, and so these decisions will be actually taken policy meeting by policy meeting, and so let me leave it, at that. How the growth inflation dynamics changes over the period, we will be guided primarily by that. Insofar as growth is concerned and the impact of uncertainties, we have to be, as I mentioned to you, there are a lot of external risks that we always, factor in when we are making our policies, especially, our monetary policy. And so we'll remain nimble and agile and take, whatever is necessary to support the Indian economy.
Despite a rate cut totally of about 125 basis points, bond yields haven't really moved. And one of the reasons is government paper coming in as well. How do you see that scenario play out, sir? And what do you think the reasons are there?
See, government bond yields, first of all, we don't target any kind of a yield. Of course, it's important because it gives signals to the private sector. Interest rates, which are outside, especially which are outside the banking sector, and so they are important. Yields have come down. It's not as if yields have not come down. Yes, they have not come down on a one-to-one basis at the longer end, but at the shorter end, yields have come down as a result, of our policy action. But at the long end, they will not. The transmission will be much lower. It will not be a one-to-one transmission because of the nature of transmission. But on the whole, I think transmission is still happening. It's still evolving. Ultimately, as you say, it is the demand and supply which is going to determine the prices of bonds and the yields. And we need to be aware that monetary policy has limitations.
Do you see those limitations in transmission of rate cuts at the retail level as well, or are you satisfied with the transmission of all of the rate cuts?
The transmission has been very good. The transmission, as I mentioned, has been very good. If you are looking at the transmission from the banking side, because of interest rates, almost about 80 basis points, vis-a-vis the 100 basis points. 25 basis points came in later, and we don't have data as to what is the softening thereafter. But for the data that we have till November, against the 100 basis points cut for fresh loans, the interest rates have decreased by about 79 basis points. Similarly, even on the deposit side, the interest rates have come down, almost 100 basis points for, retail and for the wholesale deposits. So transmission has been excellent. There is still some room for transmission to happen, given the fact that we have done another 25 basis points cut. And we have been trying to give the appropriate conditions of liquidity, etc., so as to enable this transmission to happen.
A very big part of what your focus has been, in my observation, and please correct me if I'm wrong, in the last 1 year, has been that consumer outreach to ensure that the average Indian feels the presence and the backing of the RBI for any queries and complaints that they have. Why is this such an important part for you, and what is your vision there?
No, obviously, you see, we are here for the consumer. They are our ultimate, beneficiary. Their satisfaction levels is the ultimate test of our success. And so, as you mentioned, we have taken a number of steps, both regulatory as well as operational, for improving customer service. For example, we did a campaign for financial inclusion and re-KYC starting July till October. We followed it up with a campaign along with the other regulators and the banks and the government for unclaimed deposits. Now we are having a campaign focusing at the grievances which are pending with our RBI ombudsman. Going forward, and we have taken a number of regulatory measures, if I may mention one, that relates to easing and standardizing the process for claims of the legal heirs of the deceased. There are a lot of issues sometimes, for claiming the monies and the deposits of the deceased. So we have standardized and simplified that process, and the banks are now implementing it, so that will help. And similarly, other measures we have taken for consumer service. We have reviewed our Citizens Charter, and now we have 200 services. We originally had 204. When we came out in July, we have removed 4 services because those approvals are no longer necessary. So we have reduced 4 approvals, and we have made all of them online. There is a portal in which the regulated entities can apply to us. 99.5% plus of the services are delivered on time. We monitor them and we publish them every month. On the 1st, we publish our achievement or our progress vis-a-vis, all those applications. We received, about 25,000 applications for various kinds of approvals, clarifications, licenses, registrations across our offices per month. So this has been one of our focus areas: consumer service, consumer satisfaction, and that will continue to be so in the years to come.
May I ask 2 very Aam Aadmi questions, since we are speaking about it from the consumer point of view, and this is something that I come across when we talk about inflation at lows of several years in India. People say, but I don't feel it. I don't feel my mehengai has become less. How would you explain that to any ordinary viewer watching right now?
No, inflation has come down naturally, no doubt. I mean, there is certainly, inflation has come down, as is very evident from the numbers that are given out by MOSPI, number one. Number two, even in the surveys that we do, the consumer surveys that we do, yes, we do find that the inflations that they feel or that they project are generally higher from what are actually reported, but they have come down. So it's not as if they are not feeling the impact of lower prices. They have certainly come down.
Perhaps it's because Indians are spending less on food than before. Do you think there is a case for re-looking at the entire basket, and that is something that will be done?
That's another reason, it depends on who you are talking to. So your consumption basket will be very different, from the consumption basket of a person, at a very low income levels, for example. His consumption will be more, food. For you, food will be a very less proportion of your consumption. And so inflation has not been uniformly, low or high across categories. So if you speak to different segments of society, different states, there are variations, no doubt about that. Yes, you are also right that the consumption pattern has changed over the years, and so now MOSPI has taken upon itself to review the base, and now they should be coming out with the new series and updating, the base to 2024 when we see in February when they announce the numbers. So those are positive developments. I think they will certainly help better anchor the expectations of the households because it will reflect their consumptions better.
Inflation targeting and the way the RBI looks at inflation targeting is also something under review. There is a paper, of course, which is out for discussion. Just wanted your thoughts on that. The standard has been 4% is our aim, +2, -2. Do you think that needs a relook?
I would not like to venture, into that question because that's for the government to decide. We did a consultation paper which you were referring to. We have given our recommendations to the government and the government will be setting the target. But over the years, let me say, and I have been on record saying this, ever since we implemented the flexible inflation targeting, inflation levels have actually come down. I would tend to believe that at least some of it, if not only, but a lot of it is due to this inflation targeting regime that we have put in place. Of course, this is not to say that this is the only reason. Policy frameworks, government actions, supply side actions by the government and by other players have also been equally important. But over the years, certainly after introduction of flexible inflation targeting, inflation levels have come down.
Mm-hmm. The other Aam Aadmi sawal is when, and you answered this from the governor's point of view, that the RBI's job is not to settle a price for the rupee. But when people see rupee at 90, they link it to the strength of the nation. That is there a problem? Why is India's currency so weak? What would be your message to assuage those concerns?
No, as I mentioned to you, see, we should not be looking at the price of the rupee only in terms of the strength of the economy. The strength of the Indian economy is there. It's, the growth is one of the highest, as I mentioned. So these are the indicators to be looking at as to whether we are growing fast, whether our inflation is low, whether there is a financial stability, whether we have sufficient foreign exchange reserves. And so on all those accounts, I think Indian economy, whether investment is happening, whether consumption is happening. So from all these accounts, Indian economy is doing very well. As I mentioned to you, and again I'm repeating, we will ensure that there is a financial stability in the system, both externally from an exchange rate point of view and from other aspects. And we will ensure that the movement of the rupee is orderly and it's not excessively volatile.
I think of greatest comfort maybe to Indians right now is that we have an independent, strong and stable Reserve Bank in light of recent commentary by the Fed chair talking about the kind of threat that they were seeing. As a central banker, and this is in a broader context, what are the thoughts that come to mind when you see what's happening, say, with the Federal Reserve or central banks across the world?
Central bank independence, of course, is very important. We have, over the years, moved globally. We have moved towards that for some reason, because it's important to separate that, from government. And so that is something that we need to all collectively across jurisdictions preserve, and hopefully, that should happen. That should only improve over the years.
Sir, thank you so much for your time to us here at NDTV Profit. Before we let you go, just one thought, one message for the year of 2026, at least the calendar year as we start. We've already started with some turbulence geopolitically, but the message on how you see India going ahead.
No, the future of India is good, and We will do whatever is required to be done to maintain stability. Price stability is our core objective. We'll do whatever is required for that, while at the same time supporting growth, which is our secondary objective. We are very hopeful that India, with all the reforms that the government is pushing and the other regulators too are pursuing, we are on a good wicket, and we'll continue to do well.
Thank you so much, sir. Thank you.
My pleasure. Thank you.